Good morning. It's Market Day Report. We're so glad you're with us. We're halfway through almost halfway through the week. Not quite halfway through the trading week, though. We have to wait till the end of the day. 4-day trading week because of Labor Day, right? Okay. Let's jump in. Let's see where the markets were in the overnight session. We'll start with the corn market. And we saw lower trade there. You know, the corn market, though, has been higher for the last two sessions. So we'll watch to see what happens when we open up at 9:30 Eastern. 419.5 overnight. It was off 3.5. Soybeans. By the way, our next guest, Brian Hoops, will have a little tidbit about the bean complex. Maybe something to push us higher today, maybe. 1037.5 on the new crop. It was 3.5 lower in the overnight session. And before we get to Brian, we'll look at meal, which was mostly lower in the overnight session, and oil lower as well. Finally, over to the wheat market. And we saw the December penny and a quarter lower, 527. Hard red up 3/4 of a penny, 512. Spring wheat lower across the board. Cotton market overnight, 20 higher, 66.25. All right, I teased him, so let's bring him in. President, Midwest Market Solutions. It's Brian Hoops. All right, Brian, I've been wanting to say something, but didn't want to steal the thunder. Tell us.
Well, I don't know if it's exactly thunder, but it is a sale of soybean meal to the Philippines this morning. And we've been gone a long time without any type of private sales whatsoever. So it's not corn, it's not soybeans. It may be considered a little disappointing to the trade from that respect, but it was about 185,000 metric tons of meal, again, to the Philippines. So don't know that it's going to have a major impact on the markets. We had census crush numbers that came out yesterday. That may be more market moving than anything. Soybean oil stocks in that report, 21-year lows for this week in history. Very tight stocks numbers that really support the fundamentals of soybean oil at this time, and maybe not quite so much the soybean meal. Crush numbers were very strong, certainly above year-ago levels and above the 5-year average. Those are very good numbers. Again, we actually opened higher last night in the grains, corn, soybeans higher, especially soybeans, almost 5 to 6 cent gains right off the opening. And that was because crop condition ratings fell more than what was expected. So about 65% of the soybean crop is rated good to excellent. Now that's lined up with last year's numbers, but it is the highest in the last 7 years, tied with last year. So some very strong soybean numbers despite the drop in ratings, but that drop in ratings gave us that higher opening and was pretty quickly sold by the trade. Corn also had a drop in its ratings, but still remained the highest in the last 9 years at 69% good to excellent. So still very highly rated crops. Nothing has changed along that respect. It's more about starting to get into the fields this week. Some producers starting to open things up in the Midwest. Might be a little bit higher moisture than what they would desire. And the forecast really doesn't hold out for a lot of cooling days. It's going to have to sit out in the field a while at these temperatures. So that's less than ideal, but a lot of the crop here is going to start being harvested relatively soon.
We're talking with Brian Hoops, Midwest Market Solutions. We'll take a quick break, come back with livestock markets and what's happening. Well, could we see some more record-breaking trade this week? We'll find out. Market Day Report continues in a moment. So one of the thoughts I want to build on today is, could we start seeing heifer retention and a rebuilding of the cattle herd? Throughout the day, hope you're here all day long, because I'll be dropping in some tidbits that might be indicating it's happening. All right, so it's a little tease for you throughout the day here on Market Day Report. Let's go to the markets, how we finished the session yesterday. Live cattle down 12, 239.52. That was the October, but December and February both in higher territory. Feeders higher on the 2026 contracts, but the remainder of the 2025 contracts all lower. That October hit 367.15, and September that hit 370 last week got as high as 367.70 before losing about $4 from that high and finishing in the red. But this is the one that's really kind of surprised me. 8 straight sessions higher for hogs. 95.50, that's up 47. It's like the hogs are running for the pennant here. Brian Hoops, president of Midwest Market Solutions. 8 wins in a row, that's pretty impressive.
Yeah, we are probably not done yet in that hog market. You look at the cash trade, and it was stronger again yesterday. Futures are still holding a pretty big discount to the cash. We're about $10 discount to that lean hog index. And if the cash is going to keep moving higher, that index is going to keep moving higher. So futures are eventually going to have to catch up. Now, they've got a long time to do that, about 6 weeks from now, before they really have to align. But they're not waiting for 6 weeks. They're starting to try and narrow that spread between the futures and the cash at this point in time. So you look at the cattle market, show list numbers about steady, 222,000 head. Cash is called kind of in that steady range. The weakness and the cash thoughts is coming from the cutout values. They were mixed on Friday, lower on Tuesday afternoon, and the idea is it's continuing to build that now that we're past Labor Day and that key grilling demand time frame. Will we start to see demand back off? We're starting to see the cutout values turn lower, a little bit of a concern for the trade there. Feeder cattle, however, auction market yesterday, red hot once again. Oklahoma City, we're looking at $4 to $10 gains in the feeders. Calves up $8 to $20. So some really strong markets there. And sales were pretty good at the Yankton sale barn yesterday as well. So we're not seeing a lot of weakness in these cash markets for the feeder calves. It's the fat cattle that may get more attention, however, if the cash markets do start to weaken here to this week or into next week as well.
Okay, and finally, before we go, what about the equities? We've seen the equities under a bit of pressure, at least yesterday finishing lower. Any thoughts there?
Seasonally, it's a kind of a weak month for the equity markets. A lot of times in September, we start trading lower. And so there is a lot of concern about that. You look what gold market has done, soaring well above contract highs. Silver, the same thing, new contract highs, sharply higher on the big gains there. And that is a direct result or direct idea that maybe the equities are going to falter in here and people are in buying those safe haven commodities of gold and silver.
Yep, glad you mentioned those because gold trading 35.71.80 and right near the top of the trade range today. 2 sessions, 2 consecutive closes higher, so higher over the last 2 sessions, I guess is what I'm saying. And the silver market moving higher as well. Brian Hoops, president, Midwest Market Solutions. By the way, Brian is on Commodity Wrap. Later today, Sirius XM Rural Radio 147. Brian Hoops, 2 segments in that show.